opinions expressed in the following program are those of the program host and do not necessarily reflect or represent the views and opinions held by TCN TV Network Incorporated. Due to the social nature of this broadcasting channel, videos may contain content copyrighted by another entity or person. The TCN TV Network claims no rights to the said content. TCN TV Network cannot be held accountable for the copyrighted content. TCN TV Network is a messenger and sharer of information and strives to verify but cannot warrant the accuracy of copyrights or completeness of the information on this program.
Hello, good day. You're with us today, and today we'll be discussing everything you want to know about insurance with real estate. So, welcome to this segment of Let's Talk Real Estate with Jay Bridgepall and Angie.
Hi, today we have guest Sandra Phekoo, an associate financial advisor. She's been in the property and casualty markets for 20 years. Sandra, could you tell us a bit about yourself?
Property and casualty market, 20 years, home, auto insurance. I also do life investments. Anything insurance related, call me. Whether it be an event, a party you're having in the backyard, don't forget that.
That's
right?
important. That's an impressive number of years.
Yeah.
I'm sure you're, as they say in farmers, as you're starting on it.
Yeah.
Too, right?
Oh,
Yeah,
yes.
yes.
Seen lots of things, right?
Okay.
Yeah.
So let's get going to our listeners. Most of the time, insurance is always very important in life on the whole. And there are some do's and some don'ts. When it comes to residential property, I am buying a home. Do I really need fire insurance?
Well, you're investing a lot of money, right? You want that protected. So insurance is there to help you. If there's a fire, you've lost all that asset. If you have a mortgage, obviously your bank wants to be protected, so you need to have that insurance in place.
Mm-hmm.
If you don't have a mortgage, it's totally up to you. It's not legal. It's not illegal. It's totally up to you with regards to if you want to insure your property. But again, it's your asset. Do you want to lose that if a fire goes up and it's not insured?
Not insured. Yeah, that's good. Angie, you got a question?
Yeah, is it by law required to have home insurance?
It's not a bylaw. It is definitely a mortgage requirement. Your bank wants to make sure that asset that they're lending you money is protected.
Right.
So if there's a total loss by fire, be it a windstorm or tornado, whatever the case is, they know that that can be rebuilt. You can be put back into that home, as well as the obligation to the bank is there. So the insurance company will pay the bank if need be for your obligation. You have a mortgage obligation, right?
Right.
Right. So that's very important. When it comes to a home with, let's say, it does have a basement apartment, what's involved in that?
So basement apartments, it's not an issue for insurance companies, but please let your insurance company know this. Because first of all, we have to make sure that we're rating you properly, because we want to make sure you have the right coverage, the sufficient coverage, because you don't want in the event of a loss that you realize, oh my God, I'm not covered. One example could be a possible liability claim. So that person in the basement invites somebody over, they trip, they fall, they're going to sue the homeowner, which is you, and they're going to probably maybe sue their friend who invited them over. But the fact is, you don't let your insurance company know. They can say, whoa, forget it. We're not doing this for you, right?
Right.
But also, just think of, you've invested a lot of money in your basement, you've fixed it up, and in the event of a loss, again by fire, big loss, do you think you want to have that covered?
You do.
Yeah.
You do. Now, with insurance, is there different types to cover? Is home insurance kind of an umbrella term to cover a lot of different,
So for insurance companies, we have so many different packages and choices. So you can go with a very basic policy, or we can go with what we call the best type, the blanket type policy. And then even if you have a customized home, we even have even a higher limit of coverage for you. So really, it's up to you what you feel comfortable insuring. But most insurers, like myself, we prefer to just, when we quote somebody, we quote you with the best type, so you're aware what's there, and then If you want to remove items or go with a lower, less coverage, you can do that. But it's just we would prefer that we've done our jobs and
Right,
given
of
you the best
course.
that's there,
So,
right?
so
Yeah.
indirectly, you get what you pay for, right?
You do get what you pay for. don't chip yourself on things
Oh.
like home insurance, right? It's the biggest asset that you would have, right?
Right.
Go ahead, Ange. You got a question?
Yeah, I do. Credit scores are important for a lot of things.
Yes.
Is it really important when I want to get insurance?
For home insurance, credit scores probably been used in Ontario for the last 15 to 20 years for home insurance. It is one of the factors. It is
Wow.
not the only factor.
But it's one of the factors.
It's one of the
yes.
factors
Yes.
for home insurance. Home insurance companies, we don't see your credit score like you would when you go, for a mortgage.
Right.
It's something that's done in the background. It's just part of the calculations, and it's just inputted as part of our quote. So we actually don't know what your score is.
Okay.
Right.
But just to let you know, if you've got a really good credit score, you're going to have the best insurance premiums.
Right. So one of the reasons, I guess, because if the credit score is bad, I think it's chances are they tend to go on insurance more.
Yeah, a greater
So the
propensity.
risk is higher.
That's right. The statistics show that people with poor credit scores that has a greater propensity to put in claims, even small
Right.
claims.
Oh.
Doesn't mean this for everybody, because we know people go
No,
through hard times,
Of course.
but it's just the statistics
so
show
that there's
this.
no important to keep a good credit score
Yes.
for real estate.
And some insurers, if you have a poor credit score, depending on it's just a number that comes back.
Mhm.
They're going to say to you, we can insure you,
Mhm.
but you have to pay full. We can't offer you monthly
Okay.
payments as well, right?
Okay.
So
Mhm.
there's just it's so important to keep that score. It is one of the factors, but it's important, right? It's an important factor.
So I go to the bank and I got a mortgage. And the bank is telling me here, you need to click here or sign here in this form that you will be taking our insurance coverage or you're opting out. And they're pushing it really in your face so that, telling you, hey, take this insurance or mortgage insurance. Could you shed some light on that?
Sure. Just I think everybody really should educate themselves on this aspect, because so many people have mortgages. And you can find lots of information online as well, but there's a difference between mortgage insurance and pure life insurance.
Right.
When you get a mortgage, that person who's selling you that, they are not life insurance licensed like I am. They haven't done any exams. That's why the questions are so limited, and they can't even discuss the details with you.
Right.
Mortgage insurance, they underwrite what we call after a claim happens. So if you were to pass away, that's when they're going to do their checks and make sure you didn't have asthma, you didn't have that, and the greater possibility of declining to pay. While life insurance companies, we do all our checks up front, and I know sometimes it's frustrating for a lot of clients when life insurance companies are asking, I need your doctor's report, I need this.
Right.
There's a reason we do that. We do the checks now, so if you were to suddenly pass away, there's no questions in paying that
Right.
life
Wow.
payment. And the life payment goes to you, we don't pay off the bank. We go
Right.
to you, your beneficiary.
Right.
Then the beneficiary has money in hand to say, okay, now I can put my kids to university, I can pay down some of the mortgage, I have money to pay for your funeral. So
You have more choice.
you have more
More-
autonomy on
yeah.
that money, right? Yeah.
Right. That makes sense. So really, let's say I decide to instead of taking a 25-year mortgage insurance,
Yeah.
I take a 25-year level term insurance. What's the difference? What we'll do, let's discuss a little bit, and on the next segment we'll get into that more.
Sure. So life insurance, we have so many terms, 10, 15, 20, 25, and 30.
Okay.
You pick the one that suits your needs. So if you have a 30 or 25-year mortgage, it's the same rate for that length of time. You can reduce it as your mortgage is depleting, or convert
Okay.
it, or cancel it when at the end.
You can do it that way. Wow. Whereas the bank mortgage insurance is really a decreasing term insurance.
Yes.
So every year, although you're paying the same
Same price,
premium,
yeah.
as you're paying down the mortgage, in event your family does not come home,
Yeah.
they get the lesser amount.
They do.
So technically, the bank is just covering their asset.
And it's always about the bank. So just remember that. It's not about your protection. So when you're getting a mortgage, please look after yourself.
Right.
Right?
Okay.
And don't feel pressured because of the bank saying you've got to sign it because you're getting a mortgage. That is not true. It's optional always. It's never part of the mortgage with the bank.
Wow, that's very interesting to understand what's going on with that aspect, because many people, they end up taking the bank's insurance.
That's right.
Mm-hmm.
It's insurance against their mortgage, which is not the best way to go. Maybe there's the same amount of money.
Yeah.
They could get let's say a 25-year level term
Of course.
insurance.
And it may even be less. And just remember, if you were to suddenly pass away and you've got a young family, your spouse will have 250,000, 300
To
at
spend,
hand.
yeah,
Yeah,
yes,
at
yes.
hand.
Yeah. Well, hold that thought.
well-
On our next segment, we'll continue along these lines. We have a lot more important information for you. Stay tuned.
Hello everyone, my name is Jermaine Chambers, and I'm very excited to tell you about the newest political and current affairs program coming here to Brampton. It's called On Point.
The first step of true reconciliation is learning more about one another.
Join us on Tuesdays from 4 p.m. to 5 p.m. as we discuss all the issues.
I will never forget the trust you put in me.
Municipal, provincial, federal, and any issue of national importance we will talk about on Point. So do join us.
Welcome back. So we were talking about the importance of mortgage insurance, and Sandra here has explained to us that it's best to have a life insurance versus a mortgage insurance. The main difference, if we can summarize it, the mortgage insurance is really, in a way, a decreasing term insurance. Let's say you pay off 10% of your mortgage this year, then your insurance policy tends to drop by 10%. The value, the payout value, because it's a decreasing term. Whereas a life insurance, you can take it in such a way that it can be a level term. And let's say in 25 years, right, where that mortgage is zero, you will still have that amount. Versus the other one, you will get the mortgage insurance will be zero, right?
Yeah, you get nothing.
Whereas you can still get the amount you're insured
That's
for.
right.
No, that's very, very important
Yeah.
because it's an important aspect in building wealth,
Yeah.
right? So the best way is that the other thing, as you have summarized earlier on, is that with a mortgage insurance, the bank gets paid first in event something happens.
Always.
So it's covering their part of it.
Yeah.
Whereas a family might be in a situation, say, you know what? Well, I'll take this $200,000. I'll pay some of the mortgage. I'll send the kids to university. I'll take care of life.
Yeah. Yeah.
Now you have the choice.
Yes.
And the cost factor, are there major differences within the two?
From what I've been told from when customers come to me is the life insurance is so inexpensive compared to what they took at the bank. And they didn't realize what they were doing at that time.
Right.
Wow.
Right. So it's only when they come into the office and then we kind of go through everything with them, and we give them the options. If you have a 10-year left on your mortgage, then take a 10-year term.
Right.
Unless you want permanent life insurance for later on in life. So that's why the insurance companies have so many different terms for you to fulfill your needs. And the life insurance plans, you can reduce it at any time. So if that's a choice, if you always wanted to reduce it, you can cancel it. You can change it to a permanent plan at any time.
And there's no penalties for
No,
doing
there's no fees, no penalties on it. And the good thing is when you have life insurance, say something, if you became ill, you had cancer, now you're uninsurable.
Right.
You've got that term insurance now. You could convert it to a permanent plan where you're still protected forever. So the life insurance companies cannot come back and say, whoa, you had this. No, we can't. You've had term insurance. It lets you able to convert to a permanent plan.
Okay, so let's stick to real estate.
Yeah.
Andrew got a question.
I do. For home insurance, what are some things that the insurance would include or exclude?
So home insurance, again, it goes back to coverage limits. So we have
Right.
different kind of coverage types. We have your basic, we have your middle of the way, we have the comprehensive, which is the best type. So really, it depends on what type you're taking. So if, for example, when we say you've got a blanket policy,
Right.
there's too many things to include. So a blanket policy is determined by the exclusions. So it's easy to say what's not included than to say what is included. So Things that are common would be rodents eating up your wiring. You think you've got mice and you've got squirrels in your attic.
Okay.
That's a maintenance issue.
Right.
So remember, insurance is not maintenance. It is
Right.
sudden and accidental. So
Right.
that's a maintenance. A mold in your home is not covered. A
Right.
mold would be maintenance. There's an issue with humidity, right? So that's not covered. And those things that are not covered are shown on your documents
Mm-hmm.
as opposed to what's covered because it's blanket and it's too much,
It's too much
to show.
to-
But there's other lower limit coverages, which actually we call it name perils, where it actually lists
Uh-huh.
the items you're covered for.
Okay.
So if you had a claim that was outside those listed items, it won't be covered. Right?
Okay.
So I got a rental property, and my tenant, one day I was there. Actually, I heard from someone that there was a blow up. They had meth there, and something of that nature happened in the property. Now, what's involved in rental property in the whole?
On the whole?
I mean, what would they not cover? What would they cover?
So rental properties, please let your insurance companies know that you are renting out the home to make sure that the coverage is there.
That's an important point.
Yeah.
That's why I usually tell clients, try to get the insurance policy for your rental property
Yeah.
from the same insurer that insure your primary
Home,
residence. That way they can identify.
Yeah,
In a lot of cases, sometimes the insurance company did not even know that it's a rental property.
No. And you're putting yourself at a risk if we
Mhm.
don't know if it's a rental property. We've had cases where people have had rental properties. Again, the tenants invite people over, they hurt themselves, and they sue you. You're the owner of the property, right?
Right.
You want to
Yeah.
protect yourself. Plus, you've got an asset again, and you have a tenant who now may be cooking and cause a fire and
Mhm.
all that, and that tenant doesn't have insurance. But because we insure the building, we have to make
Right.
sure that we repair the building for the fire. But if you haven't told us that's rented out, that's grounds for maybe denying that claim, right?
Right. Right.
So those are important aspects when come to, especially with tenanted property.
Yeah.
I was personally not involved, but I know of a story where one of my clients, they were renting out a basement.
Yeah.
A friend claimed to be living in the basement with the basement tenant.
Oh.
Slipped and fell on the driveway. Sued. In the meantime, the one in the basement, he applied for a driver license, so the address was there at the rental property. The other friend called the ambulance, right? The ambulance came across, took him to the hospital. Now, the situation that really occurred after that is they call the insurance company. The insurance company, are you renting your basement? Is it legal? Did you tell us we are that you have tenants? We are not covering that claim. They backed out, right? And these people end up getting sued for about $500,000 on that situation. So that's how serious it is. It was not even the tenant did not even slip and fall. It's just that they wanted some money and they made up the whole story.
Remember, liability is a big aspect of an insurance policy, right?
Right.
So we always try to do 2 million liability and above because of just the situation it is right now in Ontario. We're following the U.S. where liability suits are higher, and it covers your actions anywhere in the world. So
Right.
that's why it's so important, even as a tenant, to have a tenant policy where you have liability coverage for yourself.
That's something important.
And can I say, going back to the meth lab, as a landlord, you have to make sure that you check your property always, because there's instances where there's been fires and total destruction because there's been illegal activity, and the insurance company will not cover that at all. Right? By your tenant, because you're landlord responsible, right?
Right. So at the same time, right. So it's a joint responsibility, and more on the landlord because it's his asset,
It is happening.
right? Because anything could happen with these things.
Even if your property is vacant.
Oh gosh.
Right.
Please.
Inform-
Inform the insurance company, please. I think what people have to do is start trying to make a bond with the insurance advisors. We are here to assist and help you. And if you have questions, we're here to guide you the right way so that you're protected always. So going back to vacant, if your home is vacant, nobody's living in it, you have to let us know because obviously there's certain claims coverages will be totally denied if it's vacant. Mind you, I think people are so I think they're afraid maybe because rates might be higher if it's a vacant property. There's a reason why it's higher because of the potential for vandalism, potential for pipes breaking in the winter, or anything. So of course the rates will be higher, but you still will have protection.
Right.
Yeah.
So I'm renovating my vacant property.
Well, it depends.
What's my...
So we ask all these questions. If this is your property, your home, if it's your primary home and you're doing renovations, we ask you, so are you leaving the home and it's going to be vacant while you're renovating? Or are you totally leaving the home and living somewhere else and this is going to be renovated to sell? So depending on how you answer, we're going to put a different coverage. So if you're renovating and you just left it to renovate and you're going back in, there's a simple endorsement that we put on vacant while under renovation.
Right.
Very simple. It's not a big deal, and we understand people do this all the time. It's not a big deal, but you have to call us to let us know that.
But little renovations like pot lights or
that's
floors.
So if you're doing little renovations, just to I guess face value, you really don't need to call us for that. But if you have to be living in the home. If you're not there, you want to let us know that you're what kind of renovations. I know people add on additional garages and square footage, and then that way they leave the home. But you want to let us know. Always let us know. Call us.
Okay.
And that's why you form that bond with your advisor. So it's easy for us to discuss it. We're not going to say, hey, you're doing this. We're not going to cover you. We're not like that. Right? We're not the big bag insurance company. We really are here to help you. Right.
That's very, very important. Hey, you know what? We need to talk a lot about sewer backup, and it's a major problem. We had that major flood a few years ago.
Yeah.
So let's hold that and let's have a chat in the next session. Stay tuned.
At Benjamin Law, we understand the real cost of personal injuries. As the victim of an accident, you may be the one who's physically hurt, but your main concern is that your family are the ones who will pay the price. Benjamin Law will be there for you, helping, supporting, and working tirelessly to resolve your personal injury case. Call 1-855-899-4878 or visit benjaminlaw.ca and let our family of lawyers help your family.
World-famous spiritual astrologer and psychic Pandit Sai is born to serve people. He's an expert on palmistry and horoscope. He can handle all problems and give Vedic solutions for business, job, love, marriage, husband and wife problems, children, personal, and many others, including depression. He also performs pujas to clear all sorts of obstacles. Call Pandit Sai and see changes in your life now. 647-766-1419, located at 2895 Derry Road, East Mississauga, Airport Road and Derry.
Welcome back. So Sandra, we were just getting into sewers and flooding.
So you noticed the last 3 years, it's been a crazy time. There's been lots of flood and lots of sewer backups.
Oh yeah.
And there's a difference between the two. Sewer backup has to do with water coming out from the sewers backing up into your home, and flood is your overland flooding, getting through your home, through your windows and doors. Actually, flood coverage this is the third year in Ontario. We've never had flood coverage in Canada before, and until the Alberta floods happened in Calgary years ago, and then it was introduced in Ontario. This is the third year now. So some companies are providing sewer backup coverage only. Some companies have sewer and flood coverage. These are optional coverages. You never have to take it. The limits, you can choose a limit. Some companies are saying, I can offer you sewer and I can offer you flood, but I'm going to only limit it to 20 or 40,000. So those are some of the things you want to be mindful for when you're shopping around for your home insurance, is the limits for those. If you don't feel it's necessary that you want sewer or flood coverage, you can totally take it off. It's totally up to you. But with the weather patterns changing, and you've seen what's happened in Huntsville last summer in Huntsville, we've seen what's happened in Windsor. There's so much overland flooding. Depending on where you are, it might be a greater risk of having floods, right? And the insurance companies, we use the geographical charts that shows the history for the floodplains, so we know the areas that are higher risk. So we're all not paying the same rate for flood coverage. We're all paying very different rates depending on where we are. Even for sewer backup, we're paying different rates depending on where we are. Right?
No, that's very, very important for people to have. The reason for it is that I've seen homes when the water came up, sewage is all over in the basement. moles start to
Yeah.
grow all
Yeah.
over inside the walls, everything.
Yeah.
And I mean, the insurance companies, they're very aggressive. They
Oh,
come
gosh.
there and
Yeah.
they rip the place. They
Yeah.
get their people, rip it out, clean it
Yeah.
out, get it all looked after. So it does worth the money.
Oh, it is.
Yeah,
It is worth it because if you've ever had a sewer claim, you know what that's like. A
Oh,
mold
yes.
grows so quickly,
Mhm.
and they're there, and especially if your basement's finished,
Right.
right? If it's unfinished, then you might not care that much, but still to clean up sewer
But,
stuff in
but
an unfinished basement.
it's important.
Yeah.
It's very important to have those things.
Yeah.
But if I claim, let me say I claim 3, 4 times for my insurance, what happens? I mean,
Wow, that's why there's a deductible, right?
Right.
The deductible is there for you take responsibility for some of the claims, but also
Right.
to deter you
right.
from claiming.
Right.
And most people don't claim $2,000 or $3,000 claims. Most people
Right.
put in big claims. But if you
Right.
have a greater propensity for putting in those small claims, what the insurance company might do is say your deductible is 5,000, or we might put a higher
Okay,
deductible.
So do you guys grade us if we decide to claim more?
we
Our
might
risk
say,
goes up?
we might say, sorry, Jay, we can't insure you anymore.
Okay.
So that's a great possibility, but as
Uh-huh.
an insurer, we have access to other markets that will insure hard to insure homes, right? But so really just think about it. Every time you put in a claim, it affects everybody else because everybody's putting money into that pot to pay for all the claims.
Right.
So if you put in little piddly claims or false claims or fraudulent claims, it affects everybody's rate, right? So that's why everybody should be vigilant about that.
Mhm.
Yeah.
When I buy a home, really, I have about I have 3 insurance, not 3 mortgages, a first, second, third mortgage. Do I, as the owner, have to let the insurance company know these things?
Oh my gosh. Yes, please. Most insurers will do 2 mortgages
Okay.
only.
Okay.
Most insurers. Some insurers will do 3, only an exception because you're an existing client.
Mhm.
And we will ask you, what's the third mortgage for? Is it only for 6 months or a year? And if that's the case, we'll make the exception.
Right.
Mhm.
And plus, there depends on your net worth and
Yeah.
everything else.
But if
Okay.
that's not the case, we will have to find you another insurance company, which is what we call like a high risk market. And you do have to let the insurance companies know because that's a factor for non-disclosure and canceling your policy or not paying on a claim. And we've had fire losses that have happened where we've not paid because there's no mortgages listed.
Oh, okay.
Mhm.
Yeah. Okay. So if you don't have the lenders
Yeah.
in your policy,
Yeah.
it's not being covered.
Well, what it is if you don't have the lenders listed, the lender isn't covered. We have an obligation to the lender if there's a
Okay.
total loss.
Mhm.
So if, say, for example, you had a total loss, you somehow had mortgages on it that you never told us about, we don't have an obligation to the lender to even advise them. But that's grounds for us to say, whoa, you've got 5 mortgages. You never told us that. That
Right.
makes red flags.
Yeah.
Yeah, and that's grounds for denial.
Right. And I mean, it's very important that's why the lawyers say, hey, you send us the policy so that we can send it across
Yes.
to the insurer, so they
Mhm.
know what mortgage is registered. Many times people go get a second mortgage with
Yeah.
a second private and did not
Yeah.
inform the insurance company.
Yes.
And when that happened, in event of a claim, that part of it would not be
Yeah.
covered in case of
Yeah.
anything.
That's why, again, look after your asset. Don't let other people look after your business. This
Right,
is your business.
right.
Look after your assets, right?
No,
Yeah.
that's very important.
Yeah.
And you have a question?
Yeah. Is there a big difference between having a replacement cost value and actual cash
Cash
value policies?
So most insurance companies will insure your property and contents for replacement costs.
Right.
Some insurers recently I've seen their wordings for the structure does not say guaranteed replacement cost. It says replacement cost.
Right.
So there's a little difference between that. So guaranteed replacement costs, when an insurer puts that on, it says regardless of what we've insured you to,
Mhm.
we will rebuild that home to whatever value it is.
Okay.
And we're taking that upon ourselves because we've done our due diligence and worked out the calculations, square footage, all that.
Mhm.
Some companies will say replacement cost. That means it's only guaranteed to the limit that's on your document. It doesn't go beyond that.
Okay.
So I don't know if that's a new trend because of such a hardening market that we have, but please
Right.
be mindful of guaranteed replacement costs.
Right.
On contents, insurers will replace your items. So you have a 10-year-old TV that's worth $50 now. We're not going to give you $50. We're replacing it with a brand new TV.
Okay.
So that's your replacement cost
Yeah.
compared to the actual cash value. Right?
Okay.
Well, that's very important because,
Yeah.
I mean, I got a home that is about 60 years old and it got burned down. I was hoping that, okay, well, I'll get a new home.
You will get a new home.
Yeah, that's true. With all modern things,
You will, and I've seen it.
So okay, so that's so that really explains the difference of the two costs.
And plus, remember too, insurance company, there's bylaws that may have changed from 60 years ago to now. So when we're building, we have to make sure our policies cover bylaw coverages. So I've had clients where the railings now got to be this high, or just different things that the bylaws. So it's all included in that.
Of course, it will be at today's standard. But the question is that the insurance, when they value my property, let's say 20 years ago, the cost was lower.
Yeah.
And today, the property value is different.
Much. Yeah.
How do they look at that?
So we look, there's market values, supply and demand, strictly economics.
Right.
Insurance, we look at rebuilding costs, what about cost of labor, cost of rebuilding, lumber, all that.
Right.
Cost per square foot. So over the years, you would have noticed your building limits will change every policy because we're taking into account all those changes.
Okay, so chances are my premium will go up a little bit every year because of that.
That's one of the factors, right?
Okay.
Yeah.
Okay, because I know many people shop around the insurance company and say, you know what, this guy's taking up my insurance. Maybe time to move to get a different one. And they go and they find somebody that's a little bit cheaper, but at the same time, they don't know what they're covering.
Right.
So really, you're explaining why premiums usually go up every year. Is that mean the property value goes up?
Yeah, of course.
So of course they have to cover that value as well.
You think inflation, right? Everywhere, lumber goes up, labor goes up, right?
Right.
Yeah.
So lower premiums are not always the best choice.
I've always said it's not the best choice. I tell my customers who are with me now and who are shopping around, because it is a tight market and rates are very high right now. I said, if you get a quote out there, just send it to me. I will be happy to compare, even if ours is not as good as the other one. I will compare and I'll tell you what the coverages are, the differences are. As an insurer, I mean, that's what we do for our clients, right? And if that means them going to another company, that's okay, as long as I know that they've got the best
They're well protected.
coverage. Yes, that's important.
No, that's very, very important. Now, another aspect when it comes to real estate and insurance, commercial real estate. You shed some light on that?
The commercial insurance?
Yeah, commercial real estate. I have a property, a commercial property. I have lots of tenants in there. The tenants have insurance. I have basic insurance. What's really involved?
So when we talk commercial, it could be either commercial in the sense that it's a real commercial unit, like where we are right now, or it could be your house that's got roomers, or 7 boarders or tenants.
House that got roomers.
Yeah.
Okay. You know what we'll do? Let's address that one, because with real estate price going up so much, many people they are opting to rent their homes, like in their basement to 3 students, or they rent a room upstairs to a student or 2, and they don't understand the liability. They have never even tell the insurance company. They don't do anything. They just, hey, you want to rent? Come on in. Stay with us. And they collect their money, and these people are there. Let's address that in the next session.
My name is Trish Curling, and I am an online coach, personal trainer, and yoga teacher, and your new host of Shaping Life, which is all about understanding that we have the ability and the control to take charge of our health and wellness. But we can't do it alone, and I can't wait to sit down with the best in the industry. Please tune in every Friday at 1 p.m. live here on the TCN Network.
Welcome back, everyone. So, Sandra, we were getting into rumors last session.
Yeah. So when you decide to rent out your space, whether you're living in it or not living in it, a lot of families do live in their home and they rent maybe a couple of bedrooms.
Right.
Again, super important to let your insurance company know because, again, a greater liability issues that could possibly occur. You may have fixed your home up now to accommodate that extra roomer. So, again, rebuilding costs. We may have to account for it.
Right.
And the insurance companies will insure you with roomers. It just depends on how many roomers. So if you've got 3, most companies will look at 3 roomers. But we want to make sure safety precautions are made. So you've got your fire hydrant, your your extinguishers, your carbon monoxide detectors, all the necessaries that are there for safety, of course, right? And if you go beyond 3, then we have another market that will insure it, but you want to make sure that you're covered.
Right.
So always think about coverage for yourself, your asset, your liability.
Right.
Don't be afraid to call the insurance company and say, I'm thinking about, do you guys do this, or what would be the rate?
Sandra, do the insurance company physically comes out to the property and check it through?
So I don't know about other companies, but I know with the corporators, we do come out and we look at the properties, we get pictures, or we have you send us pictures of the entire home. So it's important just for the files and for the protection.
When do insurance companies do, in this case, do their underwriting? Do they do it before or even the claim coming after?
So what would happen is, so if I was quoting you a home, I'd get all the details. If it's a new home, you don't have access to it, I get all the details. I'll quote you on the home based on what I have.
Right.
And then I'll come out and inspect the house. And if there's things that need to be tweaked or changed or amended, or maybe you need to put a handrail on, we'll say, hey, you need to put a handrail on. We'll give you 30 days to put a handrail on there. Right. So we do that after. But if it's something that's existing, we're already insuring it. And this is now something new that you've done, then we'll probably come out, and say, okay, square footage or whatever have you added on? Do you have new roomers? And again, it's
the point I'm getting at is this. I mean, here, everybody. Sometimes we don't think about these things. I got a roomer come in. I give them, hey, take that room. They're living in there. Things happening. I did not inform you too much, or I even inform you, and you didn't come out and check it. But now it did not qualify because for it to be a self-enclosed area, it must have a self-locking door. Must be fire rated, right? You must not have an actual lock on that door. And most roomers tend to put a lock with a key on, which is against the code. So when you start to do all these things, now the insurance company comes in a claim and say, hey, this door was locked. That's why that person got killed in there.
We're not evil. So we may look at all aspects of it, right?
Right.
So we may think, well, when did you just do this? Did you just do it last month? Or was it something that's been ongoing? Or how many roomers? Or how long have you been doing this? If it was just something that, again, it's an afterthought that just happened, we may say, okay, we understand and we would pay out on that claim. But if it's something that you've been doing continuously for a long time, definitely probably would deny that.
That's exactly what I'm getting at. And that raises another important question. If you're planning on doing these things, I always advise people, the first thing to do is check with where you're living, check with the city. Right? They may send out someone to check the work that has been done. And it's not for their protection. They are really your police. They're the one who coming out and said, hey, you know what? No, you can't put the lock on. Or no, you can't do this. Which is important because then it confirms, and then the insurance company would not have an issue with
That's
you.
right, absolutely. One thing, if you think about Airbnb, everybody's doing Airbnb.
Yeah, that's
check
right.
with your townships, please, because not every township will allow it, right? And once you've got the insurance companies, we have coverage for that. So just call us. There's not an issue, but you have to make sure your township's okay with it.
If they don't tell the insurance company, chances are the claim will be denied.
Right. So it's in your best interest. It's in your protection.
And again, it goes back to forming that bond with your advisor. So you know that you're asking them advice, and they're giving you the advice, and they're not going to say, hey, we're canceling it because you're doing this. No, we're going to find a solution for you, right? I think people are afraid of maybe the price of what it would be. But again, you want to do this business, you have to be able to
You have
pay
to
the
have
premiums.
that.
Yeah.
Right. You have to do the right thing.
Yeah.
And you
Yeah.
have a question.
I do. Now, as a renter, I get a lot of, landlords saying that you need tenant insurance. I need to get tenant insurance.
Yeah.
But is that really necessary?
So I would say if you're a tenant, please get tenant insurance. I know
Okay.
a lot of tenants, a lot of renters say, I got nothing. My
Right.
stuff is worth nothing.
Right.
I don't need coverage. But just think, liability.
Mm-hmm.
Your liability covers your actions anywhere in the world. So if
Right.
your little doggy hurt somebody, that liability, your tenant's insurance policy liability will cover you. So think about liability as the main point if you don't have a lot of contents, right? Contents, on the other hand, if there was a fire in that place you're renting, we would put you up at a hotel.
Mm-hmm.
We provide money for food until you can find another space.
Mm-hmm.
Plus, you're getting all your items replaced.
Mm-hmm.
Not at if it's 10 years old, but at today's value.
Right.
So
Right.
just remember to think about that. And your contents are not just a furniture or TV. It's your undergarments, your knives, your forks, your spoons, like everything, right? But liability is one of the main
thing.
assets.
So, I mean, I have a condo. I rent my condo. The condo building have insurance. Why do I have to go and get tenant insurance? And I understand for a house, but for a condo.
Well, just remember, so if you are the owner of the condo, you own the inside.
Mm-hmm.
That's yours.
Right.
If something happens, your cabinets, your floors, who's going to replace that? And fires do occur in condos.
Right.
Well, one of the biggest issue when come to these, I tell clients that number one is that, hey, you put the bathtub on, put it to full, and in the meantime, you got distracted on your lovely show, and the phone rang, and the stove was on, and that overflow and go to the neighbor, trickle down 3 floors down. Insurance wouldn't cover you.
And that's a very common claim. It happens. So again, important because now you've got the neighbor's floor damage there, you've got your floor damage there, you didn't take the condo insurance or you didn't take the tenant's insurance if you're a tenant, right? Now you've put yourself in a hole where now you're obligated to repair or pay somebody else.
That's
like
why
that.
it's even more important to
Yeah.
have tenant insurance, especially on everything, on condos and everything.
So remember, condo insurance is, people, again, you go back to that, they think it's covered, but it's only covered the outside. So if you own it, you better insure the inside. If you're renting, same thing. And just going back to condo, one important thing is people don't realize the condominium corp, if they're short of money, they're going to come after you.
Right.
And that's covered in the insurance policy. So
Wow.
another good
That's,
factor to have on.
that's a very important aspect.
Yeah.
But at the same time, the liability comes down to the tenant. And if it's your property, finally that liability comes to you. Because in the event of a water damage, even the tenant is there, the condo corp will come after the owner.
The owner of the unit, yes.
Right? That's
of course.
true. That's
Yeah.
that's the way it's being done. They will even do the work and then you'll get a
A
nice
bill.
big fat bill from them, and the insurance company will say, hey, you know what? I mean, we were not contacted. We don't know what's happening. The place was vacant for a month.
Oh, yeah.
Right? So you never know where it goes, right? So bottom line, what the most important thing is always look out for that knowledge. Be in touch with your insurance personnel all the time. Let them know every change. Let them be the pulse in your life. Because in the event of something does happen, you want to be covered.
They're there, and we call our clients. We go out to the site when we know there's been a claim, right? 'Cause
Right.
We're always in contact with them, right?
And
Yeah. Now, a quick question for you. If I'm renting out my basement and I have homeowner's insurance already, is there anything that I would have to look into?
You should advise your insurance company that you have a second unit now. 'Cause now you've got a fridge and stove, a kitchen, you've got walls up, you've got floors up. So that's needs to be accounted for in terms of replacement.
Okay.
There's the liability issue that we talked about before,
Right.
that tenant bringing people over. Again, claims do happen with tenants. The tenants could be cooking, cause a fire, cause damage, and we have to repair it. And we're going to say, sorry, you didn't advise us that you have a tenant there now, right?
Right.
It may cost you a little bit more, but again, you're writing that off as an expense.
Right.
You're getting income, but you've got expense for the premium. So you're not losing that way.
It works
right?
out.
It works out.
that worked out
Yeah.
great.
Yeah.
So one final thought before we finish this section.
on myself.
Yes.
I would say I love my job. I love being an insurance advisor. And if I didn't love what I was doing, I wouldn't be here. And it's because I love imparting the knowledge on my clients. But I wish every person out there who has insurance would form that bond with their insurance advisor.
Right.
Please talk to them. We're not scary. We're really here to advise you and to make the best decision for you, because we want to make sure that you're protected always. That's the most important thing.
Right.
Sandra, I want to thank you so much for coming out on this show, Let's Talk Real Estate. I hope our viewers have got a good glimpse as to the importance of insurance, what to choose, how to choose, what are the problems involved, and how you can rectify some of those problems.
Thanks for having me.
It's a real pleasure. Once again, thank you. See you in the next session.